Welcome back, guys. Welcome. Now we are going to see about balance sheet. Previous video we already explained about trading account and profit and loss account. Now the balance sheet. The balance sheet is the four element is important. One is the assets, liability, cash, and equity. Okay, this four is very important for the balance sheet. We can see this how it is work, how we are going to make the profit and balance sheet. You can see balance sheet is the statement of financial position of a company. The company, what is the financial position? How you know? You have to see the balance sheet, then you know. Okay, that company is good company. There is the people are telling this is the good status company. How they know? Because of this balance sheet is good. This company is going profit. So company financial position, it is show to the balance sheet. Even the same time, it is not for the all time, it is the particular period time only, like a particular. If you are making for the balance sheet this year, this is this year balance sheet. Okay, this year what is the situation in the company, like that. You can see what is the asset. Assets are used to track the business owns. Asset include cash, furniture, building, vehicles, etc. So the assets is like it is the two type of assets, fixed asset and current asset. Okay, but what is the assets? Assets is whatever we are purchasing, it is in the company. Okay, like it is also cash, current assets. Okay, furniture, building, vehicle, machinery, plant and machinery, whatever it's called assets. Liability, we have to pay outstanding amount to the supplier. We have to pay to the suppliers of vendors, whatever service they did, whatever product they sell to us, whatever material we receive from them. So we have to pay. That is called liability. Okay, what is the equity? The equity is we are, for example, investment, the owner is investing the company or we are getting amount from the third party shareholders. See this account track, that is the owners put to the business and claim the owners have against the asset. Okay, this is the equity. Okay, then you can see this asset and liability. You can easily understand this. I need one motorbike. Okay, so what I am going to do, I have the money, like this motorbike is 100,000, I have only 50,000. I need 50,000. What I am going to take? I am going to take loan from the bank. Okay, there's the main thing. I took it the loan from the bank 50,000 and I have the 50,000 equity. The both amount is 1 lakh. It is going for the bike only. That is why asset equal to liability plus equity. So if you are going to start on coffee shop, what you are going to do, that coffee shop investment is 2 lakh. You are going to spend that 2 lakh to the coffee shop only. You are going to spend 180, the 2 lakhs is like you are showing 2 lakh, but you spend only 180. 20,000 is not going to show, that balance sheet is not tally, so won't tally. If you are going to start any business or you are going to start any purchasing or anything, whatever, that loan and equity is going to tally. If you are not going to take loan, you have the 100,000, you are going to purchase the bike. Okay, you can going to purchase the bike. It's no liability, nothing. Like no need to pay to anyone, correct? Whatever you are going to purchase the assets. So this is the basic formula, assets equal to liability plus equity. Then this is the balance sheet format. You can see easily, you can understand also. Assets, amount, liability, amount. Okay, already I explained amount, sub amount and main amount. Okay, you can make it 4 segment, like a fixed assets, current asset, long term liability, short term liability. This is the 4 elements you can make it in the profit and balance sheet. Okay, then you can find out fixed asset. What is the fixed asset? Yeah, what are the fixed asset in the company? Whatever they purchased, that is a fixed asset. Like furniture, land, plant and machinery, but already informed the depreciation class. You can go to my depreciation video. Land we are not going to depreciate it. We are not going to calculate the depreciation because the land is going to increase, not a decrease. Okay, so one thing. The furniture, the land, plant and machinery, goodwill, this all fixed assets. Okay, you can see I put the small amount. How I going to I explain about this. Land something 200, 2000 plant and machinery. This 200 how it is came. You can see the profit and loss account. We calculate the depreciation. The same 200 we took it here. This is the 200. Okay, after 2000 minus 200, 1800. Okay, the current asset. What is the current asset? Cash in hand, cash in bank, sundry debtors, closing stock inventory on the same 31st of March. Okay, prepaid expense, short term investment. This is called current expenses. Okay, because it will be very like what I am going to tell, very short and sweet. I am making the video. Okay, this is the balance sheet. I am not going to make the complicate also. Okay, you can see this like cash in hand, the current asset, because cash is coming and going. Now even cash in the bank, we are going to keep it in the today, tomorrow. This we have to pay to the suppliers. Okay, sundry debtors, that's the customers. They are paying the customers. It is going to the bank only. Closing stock inventory. Okay, and then prepaid expense, short term loan. Okay, sorry, short term investment, whatever we have to invest. No, so long term liability. Okay, long term liability means capital. Okay, this capital, you can see the profit and loss account. It will be carried forward here. You can understand. Sorry, this capital. This is the capital means investment. This profit and loss account is, you can see the profit and loss account. This 1000 rupees it is there. So you have to minus that 1000. So we have to add the 1000 plus 9000, the 10,000. Okay. Less drawings. In case the owner is took it money from the company, you have to less drawings. Long term loan. Long term, we have any loan, we have to make it the in amount there. Okay. Sundry debtors. Current liabilities. Current liability means sundry debtors. Today one supplier will want to pay. Once they pay, they don't need our service, they can go. That supplier is left, correct? So that is the current, the bank overdue. So OD also like that only. Once we paid, there's no need to pay, like a short term loan. Outstanding expense. Okay, this is called like a what expenses. Okay, I make the very simple and I make the very short and sweet the profit and loss account. You can easily understand. You can see this, both sides it should tally. If it is not tally, your profit and your balance sheet is not correct. Okay, the make sure whenever you are making the financial statement, it should tally. Okay, then the balance sheet, no need to, you have to whatever the adjustment, whatever the transaction entry is there, you have to make it here. It will be tally. Your balance sheet also tally. Okay guys, thank you so much. The next video I am going to prepare for common elements of accounting and chart of accounting. I am going to make that video that is very useful for you, because that common elements for accounting, you can see the common elements. It will come almost 40 or 35 something elements is there. That is very useful, and you can see that video. You can easily handle the accounting. Okay guys, thank you so much. Thank you guys.